Hello everyone and welcome to today's Cryptocurrencies Update. Earlier as usual, as I am busy with friends, family and loved ones in the afternoon as it is vacation time, but I do want to update you and keep you abreast, of course, on the latest developments in crypto world. So here we go. We have reached the initial breakout price levels to the upside. So that's great. The very clear A, B, C, D levels. If we break A, we go to B. If we break above B, we go to C, etc. No breakdowns, so that's bullish. Charts are turning bullish. Now I'm tracking for 5 waves up to confirm a low is in place. We don't know yet if it's the low. If it's 5 waves up, that's a very good sign it is the low. But of course, we need to see a lot more price action. So after 3 waves lower from the all-time high, at the minimum, always expect 3 waves back up. 3 waves back up can be a 5-3-5 pattern. 5 up, 3 down, 5 up. So the first 5 up are not necessarily the initiation of a new bull market. Most likely it is, but we have to remain objective. Okay, still very tradable. Of course, there's plenty of money to be made to the upside. Some followers on my crypto trading alert service, they said they've been sitting on their heads for 8 weeks and now they're making money. And that's truly trading. You have to be patient. You cannot force a trade. If there is no trade, there is no trade. You sit in your hands and stay in cash. Amateurs don't see the value of a service that tells them to stay in cash. They only want to see profits all the time, but you cannot trade all the time. You can't. The market environment isn't there. Then you have to sit and wait till the market environment changes. Nothing we can do about. And if then a service tells you sit in cash, stay patient, it is invaluable. It's truly invaluable because you're saving all your ammo for when it really matters. All other people will trade themselves to death and get bitter and disappointed and will never come back again until we're back to the new all-time highs. Rinse, lather, repeat. And we are here to prevent that at all cost. So here's the list again with all the breakout upside targets. We're bumping into these initial resistance zones. So let's see how things progress. Like Maytag, of course, is kind of not selling off, but congesting of digesting the recent gains, which are almost on a 50% level. So we can see, of course, some selling after such tremendous gains. So let's start with Avalanche, loud and clear. You can see we've almost reached the 27.5. We got to 26.35 so far today. So this is pretty close. And now we have to see if we can hold support, right? Remember, please sell into strength, all those things. We're not there yet of a full-blown bull market. Look, we're still in a downtrending cloud and a downtrending 200-day. Yes, the initial signs here of a low are in place, but there's many jumps we need to take before we can give it the all clear sign. Binance coin, bingo, reached 270. We got as high as, I believe, 275, 277 yesterday. Again, we're in the cloud. Yes, we are above the 50-day, 10-day, 20-day, and we are still below the 200-day. So please know your market environment. Of course, the current one over the last 3-4 days is better now than we've been for a long time. See this here on the left side of your screen versus what it's trying to establish now. Baby, baby, baby steps. So we need to get over 270, target 320. Not the all clear yet, but we've reached from 245-ish, I believe it was 240, 270 in a real quick. So that's been great. Bitcoin also here trying to reach the 25 to 25,500. So far we got to 24,276. Back above the 50-day as well. That has not happened in a long time. Let's see when the last time was Bitcoin was above the 50-day moving average. That was here early April. The last day was it above it. So this is definitely a change in tune. Okay, so this is good. We need to get back above 25,500 to target into the 30,000s. We haven't gotten there yet. Support is now, of course, at the breakout level at around 22,000. That should hold. We might get a step intraday below it, but we do need to hold it. If we don't, then we fall back to 19,000 and potentially back to, again, 17 to 12,000. So again, we're not entirely out of the woods yet. Look where price is in the cloud. It's not above the cloud. It's below the 200-day. So caution. Dip your toes in the water, okay? As soon as it gets too cold, please pull out. This is not yet a hodl market, not at all. Okay, that is really the message I'm trying to convey. But there's plenty of upside. The breakout had to be, of course, traded. That's something else. But we have to still be cognizant of the fact that we're not yet in a full-blown bull market, potentially in the early stages. I'd rather make less money with a lot of certainty than trying to make a lot of money with a lot of uncertainty. Nail biting, sweating, sleeping bad at night is not, in my humble opinion, conducive to a great life. And you might need to pay the piper at the end of the road, where you have to pay all the medical bills of all the stress you've experienced for all those years, and all that hard money will go to the doctor. No, thank you. But that's just me. Meantime, the chart is making higher lows and is making higher highs. No question asked. Bullish development, back above the 50-day, bullish development in the cloud, bullish development. We need to get back above 25.5 to target 30,000. So the wave count then is shown as here, 1, 2, with a complex flat wave 2, 1 of 3, 2 of 3. We're now in potentially 4 of 3, and we get a 5 of 3, a 4, and a 5. That is the path I am going to track. As you can see, it hasn't filled in just yet. So we have not a all clear sign. I want to see these nice waves develop on the orange micro scale, on the gray minute scale, to complete this green minor wave, which is a 1 or an A, because as I said, we can get a B wave and then a C wave for a larger bounce, and this larger fourth wave will continue in price and time for the large foreseeable future. So please keep that in mind. We're not close to even confirming that this wave 4, be it a major 4 or cycle 4, is in place. But again, we are back above the 50-day moving average. That's great. But lots and lots of work to do before we can finally give it all clear signs. Please keep that in mind for your trading decisions. Ethereum, same deal, broke above the 50-day moving average on Friday and held it on Saturday, took off on Sunday, and is now digesting Sunday's massive rally. And we've reached the initial target zone between 1600 and 1700. Perfect. Symmetry works brilliantly. I like it. We're in the cloud above the 50-day, but we do need to get back above the cloud eventually, because otherwise the cloud is like a lid on a pan and will keep the pressure on to the downside. We need that escape velocity to target 2200 plus or minus 100. Wave count wise, same here. Counting this as a failed fifth, it's possible for Bitcoin to also count it as a failed fifth, and then we have a 1 here and a 2 here. It's really wishy-washy. It gets us pretty much to the same conclusion. And then we have 1 of 3, 2 of 3, 3 of 3, 4 of 3, something like this. Still tracking it. Remember, Elliott wave falls more and more apart the smaller the time frame becomes. Elliott wave tracks mass sentiment. Mass sentiment expresses itself the best on large time frames. Yearly charts, monthly, weekly charts, and daily charts is already starting to become more questionable. Why? Remember, for the stock market, for example, there's a 58% chance the market will be up tomorrow. That's almost the same as flipping a coin. So that means to you how variable the market can be. If markets are variable, the Elliott wave constantly changes. When the Elliott wave constantly changes, it only leads to frustration, and only actually the Elliotician, which is on this side of the microphone, me, will understand it. But for you, most likely it's going to be difficult. And that's what I try to avoid. That's why I want you to focus on the bigger picture, longer time frames, and not try to analyze every scribble. I can show you folks that are really good at Elliott waving, but they do 5 or 15 minutes charts and it keeps on changing. I don't want to point out, because you might think these people are bad at it. No, they're really good, but it shows that it's constantly changing, because we're at this highly variable dynamic stochastic environment. And if you zoom in more and more, it keeps dynamically changing all the time. So it's better to zoom out and let the waves develop. Regardless, 1, 2, 3, 4, 3, 4, 5. Alternatively, this is already 3, and we're now already in 4. We need to target above 1700 to be able to target 2100. Same as with the symmetry, we need to target above 1700 to target above 2100. So it aligns, the Elliott wave aligns with the symmetry. I like it. Here we have Matic. Matic has been an absolute rocket. This has completely done what it should have done. And we've reached all the upside targets and have even overshot it a little bit. But that is the nice thing with a triangle, it is an initial upside target. And then, of course, the market decides how much it wants to achieve of that. Look here, this is great. We're above the cloud. After these massive gains, a little bit of a give back is fine. I like the Elliott wave count. I think I have it here. I'll show you that in a minute. And support, of course, is now at 75 cents. Look where price is on the moving averages, the 10, the 20, the 50 above the cloud. So this is what I want to see with the Avalanches, the Binances, the Bitcoins, and the Ethereums as well. And we're not there yet, right? Those coins are still here. Matic or / Polygon is already a lot further. So support is now at 75 cents, needs to hold, or we go back to 63 cents. We need to break out above $1 plus, so we can start targeting the $20s. Wave count wise, this is the wave count I am tracking, that we've completed a B, C since the all-time high here in December. Then we have wave 1, wave 2, 1 of 3, 2 of 3, and then a subdividing 1 of 3 of 3. Alternatively, 3 in gray has already peaked. I know it's a little confusing, but this is where we go again with, if you have very short-term time frames, it is easier to come up with, is this wave 3 of 3, or is this all of wave 3? Okay, so we have to be diligently tracking it, but the general pattern, as I pointed out here with these green lines days ago on the breakout, is still following nicely, right? We would rally, we would pull back, and we would rally. So far, so good. Nothing out of the ordinary. Once we see a nice, clean, clear 5 waves up, that is then wave 1A. We get the pullback, wave 2B. This is still, of course, preliminary. We don't have to go to wave 1 at about $0.6, $1.6. We'll have to track it. This is just preliminary to show you the potential path we should see, right? Rally, pullback, rally, pullback, rally, or we're now in a pullback and one more rally, as we see here with the green lines. Then we get the larger pullback for wave 2B, which is the buying opportunity for wave 3/C. All right, baby steps, starts to look good. I like it, but we need to hold support, no overlap, all those good things. But this is as good as it gets. We've not been above this trend line for a long time, and you can see when we broke out, we held it. After that, it was full-on takeoff, and that's what I like to see. Solana is not back above this trend line, so it still has some work to do. It is holding support here, but we do want to see the breakout. We do want to see it above $60, because then this potential wave 5 we're in is then entirely off the table, because wave 5 can then not subdivide anymore because we go above the start of wave 5. So this one still has a little bit more work to do. Why? Because we reached 47.5 yesterday. So we've reached resistance. We've reached the break out upside target. So for shorter term trading, it's again, maybe time to take some chips off the table, raise some stops, all those things. Super simple. Don't overstay your welcome. We're not yet in a full-blown bull market, not even close. We are above the moving averages. That's great. Again, that hasn't happened for months. I really have to go back to about April, I believe. That was the last time. So again, in April, we got very good launch. This is something you can really long very nicely, right? It went from about $90 to $150, plenty of gains. But if you would overstay your welcome, not so pretty. So we do want to avoid something like this again if we are on a long trade. We do want to long this, the whole March-April rally. Same here, we would like to capitalize on it, but we don't want to overstay our welcome. You do it, not pretty. So again, here you also want to take partial profits and raise your stops, okay? You don't want to get stopped out when you buy at $90 at $30. No, you want to buy at $90 and then rally, see how far it goes, and then get stopped out at maybe the last little position that's left at $110, or maybe even break even and be very happy with it. Because in bear markets, he or she who loses the least money is the winner. Nothing said about the bull market and making money. So we're not close even to confirming the bear market is over, but these are the first initial good signs. So here's Mara. Mara has been rocketing quite nicely, and I'm tracking here also this potential impulse. So we have the B wave bounce here in March, 5 waves lower. We've now broken above the wave 5 in red that started here in May. So this wave 5 cannot subdivide. We have nice accumulation candles. Look at the volume here, here. Today is definitely a large volume as well on the selling side. But we have 3 days of massive volume. Look how much larger that volume is compared to what we've seen all the way down into the selling. Looking for a potential 1, 2, 3, 4, 5. So question mark 3, question mark 4. Support here is at around 11.5. Somewhere around there, 11, 11.5. I'd like to see that hold. And then one last wave 5 to about $15, $16 to complete 1A. So this starts to look good as well for a potential impulse. Bigger picture wise is then that we have 5 waves higher since the March 2020 low. Loud and clear. This is the monthly time frame, and down months are corrective months. Wave 1, wave 2, wave 3, wave 4, and then a ending diagonal, wave 5 of 1. Okay, if you would plot it in simple line chart, closing prices, the waves pop out tremendously nice. 1, 2, 3, 4, and then 1, 2, 3, 4, 5. Picture perfect. So far, a nice ABC lower. Okay, nothing bearish in that sense, like, oh my God, we have 5 waves lower. Not at all. So let me go back to the candlesticks again. We bottomed right here at around $5, which is, of course, previous resistance. There it was support. Here it was support on the closing basis, right? This is monthly candles. And eventually we fell through it, as you can see, tried to reestablish itself, fell through it, tried one more time, failed, and went very, very low. So resistance, and it's now support. Excellent, needs to hold. Loud and clear, 5 waves, 3 waves lower, A, B, C, so far. If we go back above the 20s, then we have overlap with wave A, then I pretty much am giving up on any further subdivisions to the downside, and this wave 2 has completed. I like this longer term wave count. What is the upside target? Well, wave 1 went from about 50 cents to, I believe, $85. So that's an $85 gain. We bottomed at $5. Normally, wave 2 is 2 times the length of wave 1. It's 85 times 2. It's 170 plus 5. I'm looking at $175. First upside target is, of course, wave 3. Which should be at around $130. Now, you know, your upside reward, a factor of 10 to 15 versus downside risk, a factor of 2. So you can do your math for the long term. Again, as you can see, the long term really pops out the waves very nicely. So that is really all I have for today. The slides are there with the levels to watch. We've reached the upside target, so let's see if we can continue. We might see some further sideways consolidation. Thank you so much for listening. Take care, and I see you all soon again. Bye.